Howdy there, folks. Welcome into today's video. We got so much to get into in this video here today. I just want to jump straight into it. I thank you for everybody for joining me as always in today's video, okay? A lot to get through, and I mean a lot to get through in this video, okay? So first off here, the NASDAQ is now down over 30% once again, which this is the first time it has been down 30% plus basically since that June bottom we had. Now, the interesting thing at this point in time is we're only 4 or 5% away from essentially reaching the June bottom now at this point, which is obviously giving a lot of speculators, traders in the market, giving them definitely a lot of ammunition on believing that we're going back to the June bottom, which is definitely very realistic over the next, I mean, heck, if we just have another 1 week sell-off or something like that, we'll be back to a new June bottom, right? Which at the June bottom, we were down 34%, 35% roughly for the NASDAQ year to date. So we're definitely, it's definitely a potential that we go back down there, okay? No. The interesting thing is we're moving into a market of the haves and have-nots at this stage of the game, okay? And we're starting to see many stocks that are already, despite the market not even being back down to a new bottom, we're seeing countless stocks way below where they were trading at when the NASDAQ was actually at that June bottom of 34% year to date, which is very, very telling. And we have other stocks that are actually up massively from their June bottoms. So we're moving into a divergence market now at this point in time. That's getting very, very intriguing, okay? So to give you an example of this, look at AMD stock. Back at the June bottom, AMD bottomed at 73.62 roughly. And here today, AMD's shockingly enough, under $70, which I was amazed to see AMD under $70 here today. Like, this is not a stock I personally own, but I mean, they've done such a great job building their business over the years. And I mean, this stock is down almost 54% year to date. AMD stock, think about this for a moment. This stock is being treated like it is some speculative, massive money-losing company at this point in time. Because this type of move, when you talk about 50% plus year to date, 9 months into the year, right? You're talking about you're getting treated like you're that sort of stock at this point in time. And Wall Street refuses to step in this stock and buy it. That's why it hits new low. They just continue to dump the selling pressure on it. And if you're from the retail side and you're buying $5,000 worth of AMD, you're not moving this stock. It's a $112 billion market cap. So retail's not going to move this baby. So is Wall Street just continuing to funnel on the selling pressure, and they want no piece of AMD? And think about where AMD will be if we hit a new bottom for the NASDAQ. At that point in time, AMD's probably 65, 62, 59, something like that if we hit a new bottom for the NASDAQ, right? AMD's partner in crime is NVIDIA. NVIDIA is now down a whopping 58.3% year to date. But not only that, look at where it bottomed at in the June lows, 145. Today, 125. Where's NVIDIA if the NASDAQ hits a new low? 115, 110, 105, something like that's very realistic. If we were even dare to say, let's say the NASDAQ goes down 40% or so, then we're talking about NVIDIA under $100 at that point in time, which is just, sometimes it gets hard to even wrap your head around some of these numbers. We're talking about NVIDIA. This is one of the best companies in the world, literally in the world. And, I don't own NVIDIA stock, but I got to stick up for this thing because it's amazing to see it get grouped into like money losing super spec stocks. When you're talking about almost 60% year to date, that's what you got grouped into. Intel used to be viewed as one of the safest stocks in the stock market. It used to be viewed as that. Intel in the June bottom was around 36. Today it's 28. This stock has now been almost cut in half so far this year. And that's extraordinary because, like I said, this used to be viewed as one of the safest stocks in the market. And people want no piece of Intel. You can't. It doesn't matter the dividend yield. Doesn't matter the PE's down at 6 or whatever. Nothing matters for the stock except they just want to sell it. Okay. Look at a stock like Shopify. This one back in the June bottom was around $30. Here today, it's 28 and change. Shopify is down almost 80% year to date, which is crazy, just absolutely crazy. Shopify, by the way, I did want to buy Shopify stock here today, but unfortunately, I missed my move by about 45 seconds. But the only good news is, in this market, stocks pretty much go down every single day, it seems like. So, I'm sure I'll be able to get the shares maybe cheaper tomorrow or something like that. That's just the kind of sort of market we're in. So this one's already lower, quite a bit lower than where it was in the June bottom, despite the NASDAQ not being at a new bottom. Micron, one of the biggest memory chip companies in the world. This one is lower today than it was back at the June bottom for the market, right? 53.75 roughly was the bottom in the June bottom there, right? Today, Micron's at 49. It's under $50 here today, right? So where's Micron stock if the NASDAQ hits a new fresh low? 45, 44, something like that, which is, numbers you just haven't seen in many, many years. And when it comes to Micron, the issue with Micron is nothing around valuation. I mean, it always trades at extremely compelling P ratios and those sorts of things. The issue with Micron is it has a permanent cloud around it. People just never, it seems like it can never get into like a positive, like let's say memory chip prices are very high. Let's say demand is very high for NAND and DRAM and things like that. Well, for MU, people just look at it and say, well, that's this year, but next year it's going to get bad for them. And then when it actually is bad for them, it is bad for them, right? So it seems like that stock, and I have a friend who's owned that stock for many, many years, and he's like, look at how much cash flows the company produces, and look at the net income and all these sorts of things. And it's true, but when you got a stock that everybody always views it as a negative, which is MU, I mean, it can't get out of its own way. And that's, a situation here. And it's lower today than where it was in the June bottom. Meta stock, same exact situation, right? Meta stock in the June bottomed around 155. Here today it's 142. If the NASDAQ hits a fresh low, where's Meta in that situation? 130, 125? They're all in the realm of possibility, right? Crazy. I mean, look at this stock, almost 58% down year to date. Extraordinary moves. Google McDougal in the June bottom was around 105. Today it's 100. Where's Google at if we hit a new low? 92.50 maybe? 94.75, something like that. If we hit a new low for the NASDAQ, Mr. Softy, 242 in the June bottom. Today it's 240 for Mr. Softy. Look at Adobe. 361 at the June bottom. Today, 287. I mean, it's insane to see how far some of these stocks have fallen under their June bottoms without the market even being at a new fresh low. Wow. Okay. Wow is all I have to say in regards to some of these moves. Now, we're in a market of the haves and have-nots because we just went through all those stocks that are already lower than where they were back in June, despite the market not being at fresh lows. But there's a lot of stocks that are up massively from their June bottoms. And this is where we get into this haves and have-nots market. These stocks have done extremely well. Oh, wonder what the first stock's going to be. Tesla, Myesla. Look at Tesla, Myesla. From the June bottom, this stock's up 24% roughly from the June bottom. Isn't that extraordinary? And the reason Tesla's up and has performed like that, right, despite so many other stocks getting absolutely decimated, is people say, okay, you want to talk about this earnings recession, and this is how a lot of folks feel, and investors. They feel like even if there is an earnings recession, Tesla's not going to be hit. It just their backlog's way too strong, their demand's way too strong, that it doesn't even matter. And folks may be right on that, to be quite honest. I don't know if I'm fully in that camp, but I wouldn't be surprised. They just have special products that just have ridiculous demand. And we saw that. It reminds me a lot of Apple in the great financial crisis, because Apple's stock price still did fall in that situation in the great financial crisis, but they had just come out with iPhone, and so their demand was ridiculous, even despite a bad economy at that time and things like that. So, I mean, those are just something to factor in there when you got the product that is that great. Yeah, you might actually just, we don't know what's going on in the world. Like, I don't know why everybody else's earnings are falling. Ours are certainly not, right? Look at Netflix. Netflix stocks is up 31% from the June bottom. Netflix, people are looking at that advertising business and saying, ooh, I think this is going to bring in some money. We'll see. Obviously, that's a multi-year thing that we're going to see how all that plays out. But yeah, 31% from the June bottom. Interesting. PayPal stock is up over 15% from the June bottom. Interesting. Fubo stock, 53 flipping flapjacking percent from the June bottom. 53%. Extraordinary move. When it comes to a stock like Fubo, that stock had already been obliterated, right? So, it was due for a comeback, and then we've seen Google Trends go crazy for them recently, which means the amount of customers that are likely signing up for Fubo is ridiculous, and they do a really good job of retaining their customers. It means their recurring revenue is going through the roof likely right now, and we'll see that in the quarterly numbers over the next few months. And investors aren't stupid. They recognize these sorts of things and they're like, oh crap, this company's, revenues are about to explode here. And in a time period where do you find companies that have their revenues exploding right now, right? Just think about that for a moment. What companies are going to see their revenues skyrocket in 2023? It's very hard to think of any companies that revenues are going to skyrocket in 2023. Fubo's will skyrocket in 2023. One of the very few companies that are going to see their revenues skyrocket in 2023. Doesn't even matter what's going on in the economy. And that's a very rare thing. Extremely rare thing. Okay, so there aren't a lot of games in town where you can go to and say, this stock's going to have their revenues blow up in 23. Fubo is one of the very few that fits that criteria, right? Look at a stock like Honest. Honest is up 44% from the lows back in June. You gotta be flipping my flapjacks. But when it comes to a company like Honest, right, it had already been obliterated. It got hit way before everything else got hit, right? They sell needs-based products, diapers, wipes, shampoo products, soap products, all those sorts of things, right? Beauty products, cosmetics. That's Honest's business, right? And the stock's performed absolutely ridiculous since the June bottom. 44 flipping flapjacking percent. Jeez. Okay, look at Elf Beauty from the June bottom. Up almost 50%. There's a cosmetics company, right? A stock I own. Extraordinary performance. Extraordinary performance. Meanwhile, we got all these other stocks that just continue to hit new low after new low without the market even being at lows, right? And you got these other stocks out here performing, 20%, 30%, 40%, 50% moves since the June bottom. Ridiculous, okay? We're in a haves and have-nots. Now, it's almost like a Hollywood script how perfect this market crash has been. And if you've studied past crashes, you're gonna notice that what's going on right now is not necessarily something new. You saw this play out in the 08-09 crash, right? You saw this play out in the tech bubble crash as well, which are the last two crashes we had in the market that were, like long periods of time, right? And what you saw transpire in both of those is very kind of similar to what we've seen play out here. Now, no two crashes are going to be exactly identical. So there's going to be a few different reasons how you get there, how things perform, don't perform. But the general gist of it is going to be similar. And this has almost been like a perfect Hollywood script in terms of how this one's been executed, because this story starts way back in February 2021, way before anybody was paying attention to this other than people that are super up on the market and like might watch my channel and things like that. This story starts way back in February 2021. Most people have just caught on to the story over the past, 3 to 6 months. But this story started way back in February 2021 because what we saw then, the spec stocks, the companies that had went SPAC and new IPOs and things like that, money-losing companies, those all peaked in February 2021 and then all started falling in March of 2021, okay? That's when this whole deal started, way back then. Okay. Then we had stage 2 hit, which was high valuation mid cap started getting hit. Then we had stage 3 hit, which was high valuation large cap started getting hit. Then we had stage 4, which is really once you start getting into 2022, which is the indexes started getting hit. Then we had stage 5 hit, which was safety stocks and oil and gas stocks started to get hit, which over the past 3 or 4 months, oil and gas stocks have started to get hit, and a lot of the safety stocks in general. Look at a stock like Intel that was considered usually for like decades. Intel was considered a safety stock, and look at that one. It's down almost 50% year to date, right? So it's played out perfectly. And this isn't the first time this happened. This happened in 08-09 crash. A lot of the small caps in some of the more speculative stocks bottomed way before the market finished bottoming, which was like February, March of 09. In the tech bubble crash, same exact situation. You know how many companies bottomed actually in 2001? The indexes didn't bottom for like another year and a half after that. But stocks like Amazon had already bottomed in 2001, way before the indexes had bottomed. Amazon was already on a massive uptrend way before the market even bottomed. Okay, this is, if you study the history of the stock market and you look at these things, you're going to find what's going on right now is not new. This is the way this goes, right? And Amazon, by the way, back then was a super speculative, crazy stock that people are like didn't understand and was like, that sort of thing, right? And it wasn't just Amazon. There were several other tech companies at that time that also bottomed in 01, way before the indexes bottomed, and started coming back really strong. Some folks looked at it and they're like, what? Why are these stocks just continue to go up? And those stocks had already been up 30%, 50%, 70%, double up before the index bottom. Before the index bottom. Think about that for a moment, right? And it's a whole situation that has to play out. And if it's perfectly executed, it's almost like a Hollywood script in terms of how perfect it is, okay? Now, I was out there buying some stocks here today. I bought some PayPal shares. I bought 15 PayPal shares here today. I bought 442 Palantir shares here today. I bought 30 Meta shares here today. I bought 110 Corsair shares here today. And I bought 1,000 shares of Oatly here today. The one stock I meant to buy that I didn't quite get my order in time before the market closed was Shopify. And there's only one account that I have like after hours trading on. So yeah, I couldn't do it. And these were bought in my Ally account. So, I'm just continuing to just add aggressively because time is running out. And I want to explain this. And I think this is very, very important for everybody watching this video to understand this. Time is running out. First off, what do you have to go off of if you are bullish on the market? Let me ask you that. Nothing other than long-term optimism, in that there will be a brighter day ahead. Companies will have much higher revenues and EPS in future years than they do right now. You have nothing to go off of. Absolutely nothing. Everything is negative, right? We had a shaky earnings season for the last couple earnings seasons. Everybody's viewing this upcoming earnings season as being a messy one. You have the Fed continuing to raise interest rates. You have inflation still sky high. And that's in regards to CPI and core. All right. You have Russia talking about another 300,000 troops. Messy. You have obviously different geopolitical things out there also. It is 100% bearish right now. There's nothing positive to go off of other than long-term optimism, but there's nothing right now. Okay. So that's an interesting moment in time, but just picture it as two walls, right? And the bullish wall, we have with literally no bricks on our side, literally no bricks. We don't even have one brick on our side right now. Every single brick is over on the bearish side right now. The whole dang wall is a bearish wall right now, okay? But time could be running out. And as we slowly start to steal brick by brick from the bearish side over to the bullish side, that's when you begin to flip the market. Okay. Now, time is starting to run out in this whole situation because basically we have 3 weeks left of the bearish holding all the bricks, every single last brick that they hold for right now, for the next 3 weeks, essentially. What happens right here is where things start to get very, very interesting, because right here is when you start having earnings coming out. Okay. Now, let's say hypothetically, earnings are not a disaster. Let's say earnings are okay. Let's say a lot of companies come in with revenues that are in line, maybe even some revenues that beat. Let's say a lot of these companies come in with margins and earnings per share that come in line. And it's not a disaster, right? Let's say hypothetically that happens. Well, then we just stole a big important brick from the bearish side over to our side on the bullish side, right? Now, if earnings are a mess, companies are, big important companies are missing revenue just consistently, EPSs are missing, then that brick's going to stay fully on the bearish side until the next earnings period, which won't be till 3 months after that, right? So then they'll have another 3 months to run with earnings are a mess, they're getting messier, it's a disaster there, right? So that's an important thing that's going to happen there. We're either going to steal that brick over or that brick's going to stay on their side, right? Now, something important happened after the bell today. I don't know if you saw. Costco reported earnings. Costco earnings were pretty darn impressive, very impressive. But everybody's going to look at Costco and say, well, that's Costco. It's such a great company. It's so well run. That's only Costco specific. So, that doesn't matter for the market. Fair. No one's going to take those earnings serious. But when you get the gauntlet of earnings that start right here, you have to take it serious, because then you're getting everybody. This is going to be the most important week. That Halloween week right now, I'm telling you, that week's going to be insanity, okay? Absolute insanity for that week in terms of earnings. And then we'll see if we grab that brick. And if we do grab that brick, get ready to have a little fun, okay? That's all I get to say out there. Now, the interesting thing is, if we grab that brick, it lines up perfectly with what usually happens in November, December in an election year, midterm years, okay? And what we see consistently throughout time is November, December, phenomenal in midterm years. So if we can grab the earnings brick and it's not a disaster, and we grab that, and then you got right into just overall bullish market in general because of midterms, oh boy, okay? Oh boy, will there be some massive moves up. Now, if you're a buyer, you might kind of almost be rooting against that because you kind of want to be able to buy for as cheap as possible throughout the entire year. But I'm telling you, in terms of the short side, the negativity side, they're running out of time because they have literally every single brick on their side right now. There's nothing we have as bulls right now. Nothing. They have it all. That's a scary thing. That's a scary thing because if we can just slowly start to take from them, oh boy, okay? That's all I can say, oh boy, okay? So if we're going to talk about how do we flip this market, we need a few things to happen. We need those late October into early November numbers to not be a mess. If that happens, we take that brick. We need CPI in the October numbers to be in the 7s, and we need November to be in the 6s. If we can have that happen, then there's full belief that inflation's becoming less and less of a matter, which then in turn makes everybody say, hey, the Fed's going to likely stop raising rates as aggressively, which then we steal that brick as well. So we steal the inflation brick and we steal the Fed brick over to the bullish side as well, okay? Then, on top of that, if we get a sell-off, let's say harder, I think the market's already oversold pretty darn heavily. But if we can sell off even harder for the next 3 weeks, could we set up beautifully? Let's say we hit back down those June lows for the NASDAQ, the Russell, or maybe even lower, especially for the S&P. I think this is important. If the S&P 500 and the Dow Jones Industrial Average can hit new fresh lows, then we're talking about a way oversold into market where the bears already control every single brick out there. And if we can start stealing those over to our side, the move will be among, let's just call it epic moves like you've never really seen in a matter of a few months there. And never mind if folks are really caught off guard going into next year. And the interesting thing is that momentum, if that was to play out like that, okay, that momentum, let me take a drink of water. This is very important, okay? I got to get this in, this point. If that plays out, that momentum carries into January and carries into 2023, okay? And then you start to view it as, oh my gosh, the bulls are starting to steal brick by brick here. And the market starts running, right? And as long as earnings don't fall off a cliff, then, that just completely erodes. And if we can make it through, oh boy, okay? Especially when the market's so oversold and when you got countless stocks down 50, 60, 70, 80%. That's when you see some insane bounces, okay? But everything's still got to play out there, right? If earnings come in as a disaster, if inflation still keeps coming in at these 8% type numbers, the bears will continue to hold all the bricks and will continue to have a bad stock market, right? From at least a seller side. Buyer side, obviously it's better to buy stocks for cheaper, right? You get more ownership for cheaper. But, if earnings don't come around and inflation doesn't drop, then, the bears are just going to continue to hold all the bricks in that situation, guys. And so I just think that's very, very important to understand what kind of can transpire there. Hope you guys enjoyed this video. As always, I appreciate you joining me. I released this video super late last night. If you didn't get a chance to see it, it's a must watch. I promise you, it's a must watch. And that's a very rare video I ever put out where you should save it in your phone and come back to it in the future. Trust me on that. It's, I think a lot of you guys already saw this one. This is a good video too. They'll force you to sell, being funneled one of two ways there. But this is a must watch, guys. You'll definitely enjoy that and love that video. So I appreciate you joining me as always. Much love and have a great day.